Yes, I can feel the exasperation amongst Alibaba bag holders. So for long-time bag holders, I think many of us are already used to the continuous downtrend Alibaba's locked in. For investors that just joined the club, welcome. Just a word of advice though, try to get used to it. Lol. One thing you need to get used to is also liking that smash button. So don't forget to do just that. In return, you get a quick snapshot of my portfolio if that's the only thing you're interested in when clicking into this video. So stay on if you want my commentary on the market today and what I've been doing with my personal portfolio. Also, this video is sponsored by Moomoo. I understand that many of you astute investors out there keep yourselves updated to market developments almost daily. So Moomoo is exactly the app that tries to serve that purpose, being that all-in-one platform. So looking at the all-time favorite stock, Alibaba, Moomoo has a specific news tab to keep investors updated on new developments around the company specifically. On top of that, under the analysis portion, they provide a snapshot of the daily short volume and even quick valuation metrics for your references. So for those of you who want to have a gauge of sentiments around the stock itself, there is even an inbuilt comments/discussion forums amongst the Moomoo users. So for new users, you can get welcome rewards worth up to 190 Singapore dollars with your first deposit of 2,700. So I will leave the link in the description box down below. For all you foreign viewers, specifically US and Australian viewers, Moomoo is also running aggressive reward campaigns, giving out free stocks as well. So everything will be in the link below. So I'll first comment on the $15,000 portfolio that I initially started back in July of 2022. So regrettably, I understand that I haven't been posting too many updates with regards to the portfolio, and some of you have been asking me for some updates. So the issue is, compared to the last update video on the 9th of July 2022, I made a grand total of 0 moves. Yes, you have heard it right. I didn't buy or I didn't sell any position, which probably explains the lack of updates. So I've been receiving many comments along the way on how I've missed the boat when the SPY and the QQQ rebounded in the last few weeks. And also how many of all this so-called US big tech, more specifically Google and Microsoft, are quote-unquote steals. So it's good that you see so many opportunities in the markets today, but I can't seem to appreciate them as well as many of you do. So maybe I'm just blind. Anyhow, I'm always on the lookout to deploy my money into the markets, so don't worry for me. So if you haven't noticed, I'm incredibly patient. I've been in Alibaba since December of 2020. That's a good 21 months or so. So it's not a badge of honor, by the way. I'm just stating as it is. So for context, I've created the 15K portfolio as a personal challenge of mine, attempting to quote-unquote beat the market. So even though we know that it's close to impossible. But hey, where's the fun in life if you're not even trying? So based on the closing price of the SPY on Friday at $405, the 15K portfolio should be worth around 11.2K. So my account value is sitting at 10.9K now. And yes, I'm currently underperforming the SPY. But one thing to note though, out of the 10.9K, I have 9.3 sitting in cash. So that's around 85% of the portfolio not invested. So I don't run a fund, so I don't have to explain to my investors, and I'm willing to take the potential cash drag risk. Now, pivoting over to my main portfolio. That was a disaster. So for comparison, the whole portfolio was at a royal negative 13% on the 11th of July. Today, on the 28th of August, it's back to negative 24% again. And the main culprit is always good old Alibaba. So as of the recording of this video, I have around 317 BABA shares equivalent. So every single dollar movement on Alibaba will make me gain or lose $317. And for those of you who are sharp-eyed, you have already noticed that I added more Alibaba over the course of the past 2 months. I swear, I have an Alibaba addiction. Whenever I find spare change in my wallet, it almost feels like it's going to go straight into Alibaba. So I'm kidding about the addiction, by the way. Or am I? Anyhow, I think there are two very polarizing camps on YouTube today. One side, they state that it's a bear market rally, while the other says that inflation is finally taming down and the market is well en route to recovery. So I'm not here to spoil the party, but I think action speaks louder than words. So if you want to kind of infer and know my thoughts on the market in the near term, I think you can just kind of extrapolate from and infer from my actions. So my bottom line is fairly simple. I don't have the foresight of God to predict what the Fed is going to do, what is going to happen to China and its lockdowns and its election, what Russia is going to do to energy prices in the coming winter, and the list goes on. So I just want to pick good businesses that can compound over time and try not to overpay for them. It's simple as that. I'm not into making economic projections, and besides, I'm not even trained in economics, even though I know many YouTubers are, especially the economics of China today. I just find it slightly hard to part ways with a lot of my capital in today's market's expectations and also the current valuations they're trading in. So I would love to own great American brands and businesses in the long term, but would definitely hope for a greater discount to come my way. Of course, there is no guarantee to that. Especially for stock pickers out here, picking good businesses is just one part of the equation. The element of essentially trying to time the entry is also equally important, which would kind of impact your returns in the long run. Now, I've actually spent quite some time reflecting on my portfolio positions. So the first question that came to mind was, what if I was wrong? Would I be ready to lose everything I have? So the funny thing is, we all know that we should kind of invest money that we are ready to lose. But when faced with the real possibility of losing every single cent, we begin to have second thoughts. Second thoughts about our own analysis and our own position. So it's also clearly not helpful to constantly be skeptical about every single decision that you make. That's why if you're not comfortable with the idea of losing money, just put it into government bonds or something. Forget about the equities market. Now, back to the question of my own Alibaba investment. The short answer is yes. But of course, I hope that my due diligence amounted to something. Notably, the perceived risk of investing into Chinese companies with the likes of Alibaba and Tencent is several notches higher compared to the US big tech counterparts. But of course, my thesis is constructed on the basis of a few assumptions that I don't think will happen, but bears on the other side tend to disagree with me. So I think China's economy is going to bounce back even stronger after this entire kerfuffle. I think regulations in China today ensures the sustainability of the growth of these so-called big tech companies. I don't think a war is imminent. So of course, when it comes to predicting the future, everyone seemed like they had the foresight of God. However, just verbally talking on the internet do not amount to anything, by the way. We vote with our dollar bills, and I hope that my position is clear for now. So another useful question upon reflection was, assuming that we start clean slate again, would you buy the current positions that you have in your portfolio and with the same allocation? Leave in the comment section down below what would you actually do and what would your response be to your existing allocation. So my answer is yes and no. Yes, because I'm still a happy shareholder of companies like Alibaba, Tencent, Meta, TSMC. No, because in retrospect, my portfolio is subjected to high volatility around a few assumptions. China invading Taiwan is one of those examples. So even though I'm fairly confident, at least in my own analysis and prediction, that it won't happen in the near future at least, if I'm wrong, it will hit my portfolio disproportionately. Of course, I'm also not preaching for diversifying for the sake of diversifying. If not, you might as well just buy into a broad-based ETF like the S&P 500, but more so to have a greater appreciation on the few tension points that might essentially break your portfolio in these so-called stress events. Other tension points can include the assumption of a long and prospering economy. So what if, knocking on wood of course, what if the US do indeed go into a period of stagflation? So does your portfolio of companies rely heavily on the continued prosperity of the US economy? And that's just one example, by the way. So if I can do it again, I will still hold the names I have in my portfolio, but the allocation of those said positions might undergo some revamp. Then, people will bounce back, saying that, why are you not rebalancing now when you have the chance? So personally, my short answer is, I'm still contributing to the portfolio regularly. I can essentially neutralize the problem by adding to other positions, and in the grander scheme of things, at least because I'm still young, I'm able to tolerate a huge drawdown on that position. Let's not forget, Alibaba was once trading at 70 odd dollars, 73 if I'm not wrong, and that was at least a 50% drawdown for me. So do I look like I was affected? Then comes the question of opportunity cost. So I lost 50% on Alibaba, switch over to another company that I probably have lesser understanding and research on and so-called lesser conviction to lose another 50%. So that's the reality for many investors, by the way. Investors like to only look at the upside. Oh, if I redeploy my money now to this other investment idea that I have, where I probably got it on YouTube or something, I can potentially recoup my losses quicker. So if your mentality is driven by trying to recoup losses, then I think you're in a fairly dangerous place. But I still wish you all the best, my friend. So if my thesis is not broken, why am I selling? So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!